Hello, this is Matt on the Moon Lambo channel. 53.5 million XRP shifted by Ripple's large on-demand liquidity corridor. That's the headline from You Today, so I wanted to share the facts with that, and I got a couple thoughts to share with you as well. Then there's also this headline from Crypto Newsflash. Report: Stellar XLM tops crypto transactions by volume, with XRP in second place and Ethereum in third. And folks, as it turns out, there is some bogus information in here, and I'm going to use my platform to highlight that. And then we're going to take this article and throw it into the Moon Lambo wood chipper where it squarely belongs. And then there's also this. This is a piece written by somebody back in 2018 titled, "Why Market Cap is a Meaningless and Dangerous Valuation Metric in Crypto Markets." Now, folks, there actually were some good points made in here, but this is literally not true. There's a lot of misunderstandings about what market cap is, but this is literally not true. So before going any further, I do want to be clear, I do not have a financial background of any kind. I am not offering financial advice, and you definitely should not buy or sell anything because of anything that I say or write. I'm just an enthusiast who enjoys making YouTube videos about crypto-related topics, but just as a hobby and just for fun. So into this first piece, 53.5 million XRP, well, take a look at the specifics here. It's kind of interesting. Here we go. As per recent whale alert tweets, two major crypto exchanges, one of which operates as Ripple's on-demand liquidity platform, have shoveled almost 54 million XRP. The aforementioned popular crypto tracker has reported that over the past 14 hours, two heavy XRP transfers have been made, carrying 30 million and 23.5 million XRP. These two XRP lumps together are worth $43.1 million. I don't know, why do they call them lumps? I don't get it. How many of you out there remember this? This is the media outlet, crypto media outlet, You Today, that once called large XRP transfers juicy lumps. Literally, I got a kick out of that. Now, that was a long time ago. My channel was way smaller. If you know what I'm talking about, then thanks for sticking with me. It's been a long time. I mean, that was probably like a couple of years ago. But my gosh. So I just started calling transactions juicy lumps for a while, and then I got tired of the joke. But yes, they called large XRP transactions juicy lumps. So yes, succulent, juicy lumps. It actually sounds a little gross. I don't know, but that's what they call it. Anyway, piece continues. The first lump was transferred from a Bittrex address to Bitso, the largest crypto exchange in Latin America based in Mexico. The latter became a crypto unicorn after raising $250 million in an investment round in early May 2021. Okay, so interesting to see that Ripple on-demand liquidity partner Bittrex, which is in the United States, mind you, that's important, shifted a massive quantity of XRP to another on-demand liquidity partner, Bitso, which is in Mexico. This was the most important on-demand liquidity corridor before the SEC attacked Ripple. Now, I don't know the reason for this, as it's my understanding that on-demand liquidity is dead in the United States until the SEC versus Ripple lawsuit is over. They destroyed those markets. The SEC damaged those markets. And you understand why cryptocurrency exchanges will increasingly feel incentivized to adopt Ripple's on-demand liquidity as time passes, don't you? I mean, it's obvious, or if it doesn't seem obvious to you right now, it will in just about like 20 or 30 seconds. Look, cryptocurrency exchanges make money off of every single buy and sell order that's executed on their platforms. As on-demand liquidity adoption increases, plugging it into your exchange becomes a no-brainer, as you'll just be routing additional automated transactions through your exchange that you otherwise never would have had an opportunity to make money from. So it's really, if you're an exchange, it's almost like free money for exchanges. All these transactions that are just coming through, not because you're drawing in the new customers, but because these transactions are just flowing and there's organic growth thanks to Ripple's efforts. If you're an exchange, what about that is not appealing? So in the short term, I get it. You know, look, crypto markets in general are illiquid, including XRP, and then they're in certain geographic regions, United States, there are others though. There's regulatory concerns, so I get it. But damn, it works. There's a reason it is being adopted everywhere that isn't the United States, frankly. Now into this. There's some pure nonsense here. It's hard for me to believe this. Honestly, I like Crypto News Flash. They're one of two outlets I found that cover this. The other one was I haven't heard of them. They're called Outlook. They were reporting this as well. But this is clearly, there's a serious inaccuracies in what's being reported here. And I would have thought Crypto News Flash would have caught this, but they did not. But anyway, here's the headline. Report: Stellar XLM tops crypto transactions by volume, with XRP in second place and Ethereum in third. So I'm not, if you want to read it, it's on your screen. I don't want to read this whole damn article. I just want to point out the nonsense they cited about Ripple and XRP. But as far as what they said about XLM, Stellar Lumens, I didn't even bother double checking because I just frankly didn't care enough. And nothing against Stellar Lumens. I hold them. I hold XLM. I have since, I don't remember the date exactly. It was probably the very end of November. I bought it after I bought initially XRP in November of 2017. So nothing against it. I'm not as interested in it. But here's what they wrote about Ripple and XRP specifically. So they're citing here that XRP, not as many transactions per day, but they're also citing that there are mechanical limitations effectively. Here's how they worded it. Check this out. Ripple, with its XRP token, ranked second in the number of transactions per second. The company is capable of conducting about 26 transactions per second, which is 3.2 times less than Stellar and 10 times more than Bitcoin. Pause. What in the ever-loving hell are they talking about here? Ripple, with its XRP token, ranked second in the number of transactions per second. Well, look, if currently, your day-to-day basis, if it's the case that there happen to be more transactions on Stellar occurring for any number of reasons, okay, fine. Cool. I don't know what those transactions are. I don't know if that represents meaningful adoption in any sort of way. If that's the case, fine. But from a technological perspective, XLM and XRP are almost the same. Almost exactly the same. For those of you that are not in the know, XLM it's literally a clone of XRP that was slightly tweaked before launch. That's it. It's the same technology, which is why it's blazing fast and impressive. It basically is XRP. It's a separate blockchain, but it's basically the same damn thing. And so then they write, the company is capable of conducting... The company, XRP is not a company. If you're talking about Ripple and RippleNet, and you say RippleNet is capable of conducting 26 transactions per second, I'll tell you what, if that were true, Ripple would be out of business by now. If you're talking about RippleNet, separate from XRP, only handling 26 transactions per second, no. Now, if you're talking about XRP, XRP can handle on-chain layer 1, 1,500 transactions per second, and it can scale virtually infinitely by batching payments. So what in the ever-loving hell are they even talking about here? It just doesn't make any damn sense. So I read that, and it started to kind of steam my vegetables a little bit. So I thought I'd talk about it so I could just vent a little bit. I see this crap. I'm just like, who is writing this nonsense? Freaking, it's like hashtag idiot sticks, man. Hashtag idiot sticks. All right, into the next thing now. So I came across this tweet from chart analyst Wooston, and he wrote the following. Every time you see a crypto noob talking about market cap, explain what happened to XLM. They burned 50% of supply, and we had no change in price or market cap. That was his first tweet, and I sat there thinking, yep, that's correct. So why is that, though? Why is it that so much XLM could be burnt and you didn't see any sort of change in the price at all? I mean, with there being way less, it's supply and demand, right? Well, no, that's not quite how it works. So I responded with one sentence, and this was not all-encompassing. I fleshed out my ideas previously, but I want to talk about this again, especially given the article that he ended up sharing with me. But I wrote the following. People seem to not understand that burning a supply that's not in circulation does not change supply/demand dynamics at all. So what I'm saying there, effectively, is that if Stellar's holding a bunch of crypto that has never even been traded, that doesn't play into supply and demand dynamics because they couldn't even buy it. It's not for sale, right? So if it's not in circulation, it's not in the circulating supply, they couldn't buy it anyway. And so that's just a one quick tweet that, I hate trying to get complex ideas across on Twitter. It's just a pain in the ass because of the limitations. It's, the character limitation. just all that jazz. But anyway, Wooston responded and he wrote, even if it was in circulation, it wouldn't change price. And then he shared this link. Now, at the time, I was actually just looking on my phone. So at that point in time, I hadn't read the link that he shared, but I'm going to go through some of it with you here. But it was titled, Why Market Cap is a Meaningless Valuation Metric in Crypto Markets. So for now, I was just responding to him because, again, he wrote, even if it was in circulation, it wouldn't change price. And that's partially true. Here's what I wrote in response to that. I wrote, more specifically, what matters is what's currently available for sale. What's liquid? If you burn what isn't for sale, there is no immediate impact on price. And so that's the real answer. So if it's in circulation and it's being traded, so mind you, if it's in circulation, that just means that whoever created it, the issuer, they no longer hold it. It's out in the wild now. That means it's in circulation. Now it could be in cold storage. If it's in cold storage, that means it's not for sale. So if you got to look at what's liquid in terms of what impacts the price. That's where the real supply and demand is most important. That's it should be obvious, right? So if something's in circulation and it also is an exchange and it's for sale, well, that's a factor right there. It's not as impactful if it's not for sale and nobody could consider purchasing it in the first place. So that's why I said more specifically what matters is what's currently available for sale, what's liquid. If you burn what isn't for sale, then there is no immediate impact on price because people probably aren't even going to know that you burnt it. If it's not for sale, if it just suddenly goes away from the blockchain, but it doesn't change what people interfacing with exchanges see, of course they don't know. So of course it doesn't impact price. Not immediately anyway. Now, if you burn a bunch of XRP, say Ripple got rid of their escrows, yeah, fine. You know, that XRP then would never get out over the span of, say it takes them 30 years to dole it out or whatever it ends up taking them. And so, yes, if there's less XRP over a longer period of time, if it continues to be adopted, of course that plays out. I'm just saying in the here and now, that is not impacting the price of XRP, unless there's some sort of psychological response. There could be that too. Then that typically markets would just go back to where they were before the psychological impact. You know, markets correct, they're volatile and stupid. But yeah, if you're just talking about it getting burnt and then over the span of the next, few decades, it doesn't get doled out, of course that would impact price if it were to be doled out. So I understand if it no longer can be doled out because it's burnt, then yes, future price would respond in a different way because of that factor. But what I'm saying is in the here and now, if you just burn Ripple's escrow and outside of a psychological impact of that, because that would make news, outside of that, it doesn't impact supply and demand. Period. It just doesn't. What people are seeing as available for sale on any exchange on the planet does not change whatsoever. And so these people that are irrationally speculating with one another, they're not even going to see that. Okay? That's the point that I was making. But then you can get into this bigger point here. So this is written by somebody named Anthony Beck on December 17th, 2018. So there are a few good points in here, but the core premise, the concept, is incorrect. And it was titled, Why Market Cap is a Meaningless and Dangerous Valuation Metric in Crypto Markets. So I read through this once earlier today, and I'll just share with you thoughts along the way. But let's go through this because it's a fun thought exercise, I'll tell you that. Much like the traditional stock market, the crypto asset market overflows with people who invest money in a state of mind-boggling ignorance. I can agree with that part. Anyway, in some cases driven by cynical greed, and almost always by a sheep-like mentality and sublime inability to question established concepts, investors, both newbies and even those considered astute, with millions of followers and dollars under management, have been reduced to delusion on an industrial scale. Market cap, or market capitalization, is a calculation that emerged from traditional finance, but one that has also seeped into the crypto world. It's used everywhere as a justification for investment decisions and a metric to measure the size and value of a cryptocurrency or token, but there's a big problem. Market cap is meaningless, easily manipulated, and creates a false sense of value. It's actually even more than this. It's downright dangerous because it misleads investors and plays a role in the crypto panics and wild swings that so often impact the space. So let me try and boil this down, folks. To say it's meaningless, is literally not true. Look, humans want to and should rank the value of cryptocurrencies. And so they're attempting to do that. They don't always do it perfectly efficiently, but they need some order by which to rank them. Now, note that I said value. Value is different than price. When we talk about price, we're just talking about what a crypto asset is being sold on the open market for at any given moment. When you're talking about value, it's like, what problems is it really solving for what people and or businesses? Because if there's value and it's actually solving problems, then the price should ultimately follow once markets figure that out anyway. So very clearly, the entire crypto asset class moves in tandem. Yet, even though that's the case, like, why is it the case if this is actually meaningless? If market cap is meaningless, as this author asserts, how is it the case that Bitcoin has always been number one in terms of market cap? There's never been a moment where it's not been number one in market cap, at least as reported by CoinMarketCap and LifeCoinWatch.com. Always been number one. Why is that? You know, like it's to state that it's not useful and it's meaningless is incorrect, because this is the market going through the messy process of figuring out what deserves to be where. And if you look at XRP, there's a reason that it has always been in the top 10 cryptocurrencies by market cap, whereas most cryptocurrencies that have ever at any point in time been in the top 10 cryptos by market cap, they're no longer in the top 10 cryptos by market cap. Now, why is it? Is it just a fluke that XRP's been up there that whole time? Or is it actually the case that there are enough people on the planet like me, and perhaps you, because you're probably more educated if you're, in the XRP community actually doing your research, is it more likely that people like you and me are aware of this? And as a result, even though most of the market, it's just a bunch of irrational people speculating, which they should be able to do, even though that's most of what it is, could it perhaps be the case that XRP's been up in the top 10 cryptocurrencies by market cap its entire existence, almost an entire decade, because we understand its utility, its technological, how technologically advanced it is relative to Bitcoin? I mean, it's the best cryptocurrency arguably on the planet for payments, certainly. So we get that, and we see real world adoption is occurring. So might that be the case that there are enough of us that hold confidence that even when the price goes down, enough of us are like, price is lower. Looks like a good buying opportunity. Might that be the case? Or is it actually a fluke that XRP has been in the top 10 cryptocurrencies for its entire existence? Well, it's not a fluke. Of course it's not a fluke. It doesn't mean that markets are perfectly efficient and that they know exactly what the landscape's going to look like if you fast forward 5 years, 10 years, a couple decades. But it does mean that there are enough of us out there that get it right now. And so to state that ranking cryptocurrencies by value, or at least perceived value, to state that's meaningless or dangerous, oh, hell no. How do you want to rank them then? Should humans not be able to rank them? Because I'll tell you what happens, because people do have this perception, and again, it's right or wrong. And again, I recognize the difference between price and value. You go to Bitcoin, here's Live Coin Watch. If Bitcoin dips low enough and other cryptos didn't start to dip, I mean, given that people have the perceived value of Bitcoin at whatever it is, if it starts to go down low enough where it's like Ethereum might overcome it, people will start to think, looks like Bitcoin's probably undervalued at this point. And not that Bitcoin will stay number one in market cap forever necessarily. That's not the point that I'm making. But I'm saying it matters. I'm saying all of this matters, ranking this. All these cryptos are jockeying for positions, and this is humans' best yet messy approach to saying, okay, this is what the value is we think right now, or at least the perceived value, since there are so many unknowns in the crypto space. That's valuable to rank them, though. Of course it is. Are you kidding me? It's absurd to think that it's, and then to state that it's dangerous on top of that for humans to try and figure out where the value or potential value is. That's dangerous. Or, I mean, do you think that these people that invest, even if they end up getting financially harmed, that it's somehow we shouldn't rank these things because they're financially inept and they made unreasonable, risky situations? So we should just take away people's ability to look at this rank ordering by market cap? Like, what is the proposal there even? What is the thought? It just doesn't make any sense. So I reject that while recognizing that most of these cryptocurrencies don't have value. I'm recognizing that point. And the perceived value might end up being different from what we see if you just fast forward. It probably will be a lot different. than what's anticipated right now if you just fast forward a bit into the future. But the idea that this is meaningless is not correct. Not correct at all. Piece continues. The continued proliferation of the term speaks to a reality of investor laziness. Most investors require a simple way of finding an answer to what is a very complex subject, the value of a network. It also speaks to the greed of some investors who use it cynically and the media's insatiable appetite for sensationalist headlines. So pause. Again, look, as time passes, it will become more and more clear as real adoption takes place where money should be allocated. It is less clear right now. People should be able to speculate, and money will flow where the value is. Right now, there's not much value in crypto in terms of actually solving problems. There just isn't. That's the truth. That's the cold, hard truth. It doesn't mean I don't. I love crypto. I wouldn't sleep easy at night if I didn't have exposure to crypto, especially my XRP. But this is the messy process of figuring this out. Now, to think about the dot-com boom and bust. So many, we had like a $6 trillion bubble, if memory serves, a couple decades ago with the dot-coms. Well, was that dangerous? Or should people not have had the freedom to make financial bets? Because I disagree. To me, that was the messy process of the market figuring this stuff out. A bunch of people made a lot of money. A bunch of people lost a lot of money. And that's freedom of choice anyway. But to state that something like that doesn't help figure out where the value is, no, that is humans figuring out where the value is. And after the major crash, for the dot-com boom and bust, people had the come to Jesus moment, and they're like, wow, we were really stupid. And then they stopped putting money into crap that didn't make sense. We haven't had that moment for crypto yet. But that doesn't mean that there isn't utility. There isn't some sort of utility in humans ranking things like that. That's completely absurd and silly. It's just completely ridiculous. And then this continues. Market cap or market capitalization is calculated by multiplying the circulating supply of a cryptocurrency or token by its last transaction price. It's a widely used metric for measuring the size and value of a cryptocurrency or token network. Let's pause and note. Speculative on future value mostly, actually. People are trying to figure it out. But even in the stock market, people don't do that perfectly. They're still placing their bets and they could be wrong. There's always a risk associated in this. It's just that, when you're talking about stocks, it's not like that's an immature asset class. So of course there's more certainty and less volatility. That's the difference here. That's the core difference. So what? And the piece continues though. It's a simple calculation, which is perhaps why it's so widely used. However, the real question is, what can it be used for? What does it matter? The answer is absolutely nothing. Here's why. And again, this is so wrong. If we weren't able, if it were impossible for us to rank by market cap, like who knows what Bitcoin or other things would be worth, because people do have perceived value. And I said perceived value, which is different than real value right now, but that's okay because eventually it shifts into value if it deserves to be there, or it just goes lower and lower in market cap and into oblivion. But that is how it should be. But I'm telling you, like the price of every crypto on the planet would be way different if people were literally not allowed to compare one crypto to another. Like what he's proposing, he's saying this is market cap's useless. It's worth absolutely nothing. And in order to hold that position, you'd have to believe that it doesn't make rational sense to compare the market rate of one crypto to another. You have to actually believe that, just because there isn't sufficient value in the asset class right now. I could not disagree more. And then he wrote the following. It's essential to find out what a company or asset you are investing in is worth when making an investment. If you understand what something is worth, its value, it's possible to judge whether an investment is over or underpriced. Herein lies the problem. Market cap is about price, not value. Let's pause. In stocks, the stock price is about price, not always value. The market is doing its best to determine what the price is, or even if the value isn't there because there's a young startup company that people are throwing a lot of money into, the value might not be there. Are you familiar with Theranos? Have you ever looked up Theranos? There are all sorts of examples, tons of examples. And some of them are scams, some of them are not. But it's not value. It's more like perceived value even then. It's just that markets are more efficient when it's something mature like that, and there's less of a frenzy around the thing in general. That's all it is. It's not like stock prices constantly going up necessarily means that economic output from a company that initiated that stock, it doesn't mean that even the economic output went up. Think about what happened during 2020 when we had the pandemic begin. Stock prices went up, and if anything, like economic output decreased substantially for so many of these companies. It's not always connected. It's not always correlated. It's not always value. This guy's wrong. This is absolutely just not correct. It's about value or perceived value, what it might be worth in the future. It's speculation, folks. There's always going to be speculation here. This guy's getting it wrong, so I respectfully disagree. Anyway, he continues. This is a fundamental distinction that is often overlooked. Price is what you pay for a coin or token. It has nothing to do with what you actually get, aka value. It's an indication of what people are paying for something, and this is usually driven by irrational sentiment, which has little connection to an asset's real value, assuming that whatever the market is willing to charge for an asset is equal to what it's worth is a big mistake. Well, pause. I agree with that last sentence. It is a mistake to assume one or the other. But to state that the process is useless, which is what this guy's arguing, is wrong. And then he continues. Think about the gains experienced by crypto assets in the last few years. Sometimes overnight, Bitcoin or Ethereum has added billions to its market cap. But what actually changed? Did they get more users, launch a new technology, or achieve more mainstream adoption? What changes occurred to the underlying fundamentals? Pause. Look, they're not always aligned. For example, you can consider Amazon. It went from worth over $100 to like, I don't know, $6 or $7 with the dot-com boom and bust, but its underlying metrics were actually getting better. So the company metrics getting better, its stock price were going down. So the fact that these things don't always correlate to one another is not an indication that the entire process should be abandoned, or that it doesn't work, or that it's not useful. Again, another example of why this guy's wrong. Anyway, he continues though. All that happened was more investors were willing to pay a higher price. In the vast majority of cases, no underlying value was added to these assets, just more sheep willing to pay higher prices, which resulted in the market cap skyrocketing. As the market cap skyrockets, more sheep mistakenly believe the asset to have increasing value, and the cycle continues. Pause. If the market's wrong in crypto, yeah, people can get bit. If the market's wrong in equities, yeah, people can get bit too. You have to make your own adult decisions and recognize risks. That's it. That's it. And then he writes, the critical takeaway, market cap is about price, and the price has nothing to do with value. It's just a multiplication of the last transaction price by the circulating supply, and therefore has no use when trying to assess value. So there you go. Just don't compare one asset to another. It's just a futile effort. It has nothing to do with any value. And again, it's not literally true. It's not that, again, to be super clear here, it's not that these positions of market cap don't represent any value. It's that they represent almost no value, which is different. Most people don't understand any sort of like the actual adoption in the real world of XRP, for example. But enough do. It's because look, in order to say that it's not true, then you just every day have a different set of random 10 coins in the top 10, and Bitcoin would never be number one. But people disagree with that. People just disagree, and they're placing their bets. And so this is wrong. So yeah, in terms of like what this is all worth, and he does go into like explaining further what, I don't want to go through this whole thing. It's pretty long here. He does go into explaining what market cap is. And it really, what he said is correct. The way that's calculated in crypto, which I dispute, but this is the way it's calculated, is you take circulating supply times the current market rate. And so just because somebody's willing to pay a bunch more than the last person, you can get this huge multiplier effect where it's suddenly worth way more in terms of market cap. And he does accurately state here that if, here I can read the sentence, if, for example, a market cap rises or falls by $100 million, it doesn't mean $100 million has entered or exited from the asset. That's true. So he is right about that, for sure. That's why you can get a price with almost no money. I've said this so many times. You can bid up prices of crypto with almost no money flowing. If there's a frenzy and the next person wants to pay that much more, bam, you get huge valuations in that sense. But almost no money has to flow in. Which is, to me, that's exciting, though. Like, I know that's how people behave in crypto. But, yeah, it's certainly, because, again, the calculation is the circulating supply times the last price that somebody just paid for, the current market rate, in other words. That's it. So people are bidding up the price, and then you just take that way bid up price times the circulating supply, which in most cases is the same as 24 hours before the pump happened. Well, yeah. It's pretty clear to see that happened. So that part's correct, but no, humans need to be able to have an understanding of how a crypto compares to another crypto. And even though this is inefficient and messy and people can get bit, this is the best process that we have right now. And it's a unit to look, it's a metric you can look at to make the determination in terms of what value. And so humans as a species are doing this the world over. And yes, it's messy, but it does work. And if you fast forward decades from now, it's going to pretty well be figured out. It'll be looking more like the stock market in that sense. So anyway, I haven't talked about that in forever, so I just want to kind of say my piece on that. So nothing against the guy that wrote that. I just think that he's very wrong on much of what he said right here, but right on a couple other things. I'm not a financial advisor. You should not buy or sell anything because of anything that I say or write. That would be a very, very, very bad idea. Until next time, to the moon, Lambo.